Before you risk another dollar in the Forex market, ask yourself, do you truly know what's working for you, and what's costing you money? Welcome to this powerful session of the Professional Forex Learning Series, where we go beyond strategies and indicators, and into the habits that shape long-term success. Today's topic is what turns beginners into professionals, and what keeps pros sharp and profitable. Backtesting, journaling, trade review. If you've ever felt stuck, emotional, or confused in your trading journey, this could be the missing link. So take a deep breath, grab your notebook, and let's unlock the secrets of consistent trading together. The Professional Forex Learning Series. In today's session, we're diving deep into one of the most powerful, yet most overlooked habits that separates consistent, profitable traders from the rest: backtesting, journaling, and trade review. Whether you're just starting out or you've placed hundreds of trades, understanding how to reflect on your performance and extract valuable lessons is what truly accelerates your growth. Get ready. This lesson could be the breakthrough you've been waiting for. What is backtesting? Let's start with backtesting. Backtesting is the process of applying your trading strategy to historical market data to see how it would have performed in the past. It's not about predicting the future, it's about understanding how your setup behaves across different market conditions. Checkmark example. Let's say you have a simple strategy. Buy when the 50 EMA crosses above the 200 EMA. Take profit at 50 pips. Stop loss at 30 pips. You can go to a chart, let's say EUR, USD, and scroll back to January 2022. Now, simulate each trade based on your rules. Track how many would be winners, how many would be losers, and what your overall net result would be after, say, 100 trades. Why it's important. You gain confidence in your system. You identify drawdown periods. You can tweak your rules before risking real money. Backtesting is like a flight simulator for pilots. It's your chance to train without crashing a real plane. The power of journaling. Now, let's talk about journaling your trades, a habit that can change everything. A trading journal is where you record every trade you take. But it's more than just a list of entries and exits. It's where you document your thought process, your emotions, your reasons for entering, and most importantly, what you learned. What to include in your journal: date and time of the trade, currency pair and direction, entry and exit price, stop loss and take profit levels, reason for entering the trade, emotion before, during, after the trade. Was it a valid setup? Result: win, loss, break even. What did you learn? Real-world analogy. Imagine you're an athlete. After every game, you watch the replay to see what you did right and where you slipped. That's exactly what journaling does. You stop guessing and start understanding. One trader said, "When I started journaling, I realized 70% of my losses came from emotional trades I never planned. That awareness alone cut my losses in half." This is where you truly start to evolve from just clicking buttons to becoming a professional. Structured trade review. Journaling is daily, but every week or month, you should take time for a structured trade review. This means going back over your journal and looking for patterns, not just in the market, but in your own behavior. Questions to ask. Which trades followed my plan perfectly? Which trades were emotional or impulsive? What setups worked best this month? What times of day or currency pairs gave me the best results? Am I improving or repeating the same mistakes? You can also use spreadsheets or trading analytics platforms to visualize your performance. Pie charts, win rate graphs, profit curves, all these help you see what's working and what's not. Let's say after reviewing 40 trades, you notice that 90% of your winning trades happen during the London session, but you keep forcing trades during Asian hours and losing money. That insight allows you to narrow your focus and improve your win rate, just by reviewing. Practical tips for mastering this process. 1. Set a weekly review day. Every Sunday, review your past week and set goals. 2. Use screenshots. Take before and after screenshots of every trade and label them. 3. Be brutally honest. Your journal is for your growth, not your ego. Don't skip bad trades. These teach you more than wins. 5. Reward improvement. Celebrate progress, not just profits. Let's say you're backtesting a trend-following system on EUR, USD. 50 EMA greater than 200 EMA right pointing arrow only buy. RSI greater than 50 right pointing arrow confirm strength. Entry on pullback to 50 EMA. SL equals 30 pips. TP equals 60 pips. You load EUR, 1 United States dollar hour chart and scroll back to March 2021. For every time the criteria are met, you record the result in Excel. Trade hash entry date result notes. 1 the 3rd of March 21 win strong uptrend. 2 the 4th of March 21 loss entered too late. 3 the 6th of March 21 win perfect bounce. After 100 trades, 63 wins, 63% win rate. Average risk reward equals 1. 2. Total pips gained equals plus 1,200. This gives you the confidence to go live, but also to adjust the entry timing to reduce late entries. Example 2. Sample trading journal entry. Date: April 10, 2025. Pair: GBP, JPY. Direction: sell. Entry: 191.20. TP: 190.20. SL: 191.70. Reason: break of major support plus retest plus bearish engulfing plus divergence on RSI. Risk: 1%. Result: win plus 100 pips. Emotions: confident. Waited for confirmation. What I learned: patience paid off. I avoided FOMO entry. Trade moved cleanly in my direction. Now compare that to a bad trade the next day. Date: April 11, 2025. Pair: USD, CHF. Direction: buy. Entry: 0.9110. TP: 0.9160. SL: 0.9080. Reason: just felt like it would bounce. No setup. Result: loss minus 30 pips. Emotions: impatient, distracted. What I learned: never enter without a plan. Emotional trading costs real money. Over time, these notes help you track emotional patterns and avoid destructive behavior. At the end of the week, you go back through your journal. You had 10 trades, 6 wins, 4 losses. All wins followed your plan. 3 of the 4 losses were impulsive entries outside your strategy. You open a spreadsheet and see this. Set up win percent notes. Break and retest 80% works well on GBP, USD. Double top 40% timing too early. Range breakout 100% only 2 trades. Very effective. You realize. Best trades are during London Open. Avoid trading during Asian session. Low volatility. Double top entries need extra confirmation. Action plan for next week. Only take break and retest setups. Wait for volume confirmation. Journal every trade with screenshots. This kind of weekly reflection boosts discipline and helps you avoid repeat mistakes. Student case study. James the Overtrader. James is a beginner who took 45 trades in 1 week. He lost 70% of them. Frustrated, he almost quit. Then he started journaling. What he discovered shocked him. 80% of his trades were outside his strategy. He overtraded every time he was bored or angry. His 10 planned trades had a 60% win rate. His 35 unplanned trades had a 20% win rate. He made a rule: no journal equals no trade. 1 month later, James cut down to just 3 trades a week, but ended up profitable for the first time. His quote, "Trading less, with intention and journaling, made me more money than trading all day without purpose." You don't need 1,000 indicators. You don't need to stare at the screen all day. What you need is clarity, discipline, and honest reflection. Backtesting tells you if your system works. Journaling tells you if you are working the system. Trade review turns your mistakes into powerful lessons. This is how professionals trade. This is how you can trade. In our next lesson, we'll break down risk management strategies that top traders use to protect their capital and grow steadily. Until then, keep learning, keep journaling, and keep showing up. Your breakthrough is closer than you think. You don't need 1,000 indicators. You don't need to stare at the screen all day. What you need is clarity, discipline, and honest reflection.